Welcome back to the channel, everyone. Auterman with you here today. So in today's video, we're just going to be going over information about futures trading. So this is part 3. If you have not watched part 1 and 2, I highly suggest that you go back and watch those, because each video is going to build on itself, and some of the stuff that I might bring up in the newest video might just be stuff that I already talked about, mentioned, and that you would need to know in the videos prior to that. So please watch this in order. But if you have been, thank you. However, there's only one person that's been doing that. So unfortunately, we don't have the most views. So if you could just go ahead and share this video, this channel with people that you might think would get some major value, that would be awesome. Would really appreciate it. But without further ado, let's hop into it. So I was going to make this video kind of like how I did the last one or two, and just go down the list and write a bunch of stuff about information about futures trading, but I just think that's kind of pointless because it's really easy to just find the super basic information. None of this is complex. You can literally search up what is futures trading information, and find all of this. But what I think is going to be super beneficial is just going on a site like Charles Schwab and just going down and just explaining some stuff to you guys. So first of all, I'm not really sure who exactly is watching this. I'm not sure if you need to know everything about futures, or just they're just something to trade, like I could go and say that, yeah, a stock is a part of a company, and this, and this, that. But like, does that really matter? Maybe not. But anyways, I just don't know how in depth I should go on here. I think it'd be a little bit better if I did a live for some people and I could get real-time feedback. But I'm just going to try to explain it in the simplest way, because again, guys, it is not that complicated. Just focus on the easy stuff, and trust me, that's all you need to do. I'm going to try to make these kind of videos just straight to the point with as little fluff as possible, because you really don't need a lot of information that people give you. It's just fluff. You only need just a little bit. So without further ado, let's get into it. So what Charles Schwab say, the super exact definition is: futures are a type of derivative contract to buy or sell a specific commodity, asset, or security at a set future date for a set price. So if I buy a futures contract at $400, well, that's the price that I'm going to be able to buy it at. If it goes higher, then I would be able to buy it at 400 and exercise it and be able to buy from whoever is selling me that contract, and we would have a mutual agreement and a contract to the seller would deliver whatever, either a physical asset like gold, cattle, orange juice, like that kind of stuff, or for indices, I'm not sure actually exactly how they do it. I mean, it's just for hedging mostly, but basically you buy a future, you can buy it at that price. You're basically just saying that now I can buy it at that price. And if you sell a futures contract, you're saying that you will sell it at that price, and bam, there you go. Does that really matter for intraday futures trading? Not really. But, just trying to explain it to you guys just so you get a little bit of a gist of what a futures contract even is. But, I mean, it's not that different from stocks or options. And yeah, so there's two types of uses for futures: investing or I guess speculating, and hedging. Speculating is what we do, just buying, selling, day trading, and hedging is basically just risk management. If a farmer needs to be able to sell his wheat at $5, then he'll sell some contracts at $5, and boom, there you go, right? So it's super easy, and yeah, it's risk management and hedging. Why trade futures? There's a lot of pros to trading futures. So the first one is leverage. You get a lot of leverage. So if you go to the futures margin rate on TradeStation and you look at right here for intraday initial, which basically means how much money you need in your account to put on the trade, you can see that for one E-mini contract, $1,232. So of course you would want more money in your account to cover any sort of drawdown, but in theory you could take on 50, which is the point multiplier for the S&P 500 futures, times the index price, which I think is around $4,500. Multiply that, that's over $200,000. So you could control $200,000 of notional value for just over $1,200, right? Think about how much leverage that is. So if the S&P goes up 1% in a day, right? If it goes up 1% in a day of $200,000, that's over $2,000. You could double. Or wait, what would that even be? Yeah, I don't know, double, triple your account. You would basically be able to make $2,000 plus with just over $1,500. That is an insane amount of leverage. So you really don't need a lot of money to start trading futures. And actually, if you look down here at the micro ES, which is basically a tenth of an E-mini contract, you'll need $123 to trade a tenth of the size, so $5 a point. But still, so just whatever it would be for ES, just divide it by 10 for micros, and there you go. So you really do not need a ton of money. With $150 or $200, you could start trading futures and make a decent amount of money. If you catch 5-10 points on ES with one micro contract, so you need $123, let's just say $200, with 5 points caught, that would be $25, and with 10 points caught, that would be $50. $50 on a $200 account, a 25% return in a day. So while yes, you can make pretty crazy gains, remember you could also lose 5 or 10 points and be down 25% in a day. So yeah, it can go either way, remember. So you always have to have good risk management. But again, that just shows how much leverage there is in futures trading. So they have diversification. Basically, you can trade a bunch of different stuff. Financial futures, currency futures, energy futures, metal futures, grain futures, livestock futures, food and fiber futures. A ton of stuff. This is way more than you would ever need. And the people that are trading food and fiber futures, grain, livestock, even energy futures, it's mostly going to be companies or people that are just trying to hedge, or maybe some speculators, but this is just a lot more for hedgers. Really, the only stuff that we're going to be focusing on is the E-mini, S&P 500, NASDAQ, kind of the Dow Jones, and then gold and crude oil. So basically 4 or 5 futures contracts. So I like to keep it super simple, super easy just to not get lost in the weeds. And so for the next pro, we have short selling. So yeah, with stocks, it is super hard to short and get an effective short and not have to pay a bunch of money in margin interest or have to locate shares and pay a ton of money to even be able to short a stock. So that is super hard for some stocks. I mean, if it's Apple or something, it's not, you can easily short, but again, you're going to have to pay margin interest, which is kind of brutal. It's like over 10% a year. So if you get stuck, it can just kind of ruin you. But with futures trading, every single bid and every single ask, which is basically a buyer and a seller, it's always someone's going long, someone's going short. So someone's buying, hoping it's going to go up. Someone's selling, hoping it's going to go down. So, and there's never any hard to borrow or locates. You can always buy or always short. So that's really, really nice, because if you just take a look at these moves, you can capitalize any single way that you want, right? You don't only have to buy and only look for buys because you can't short. You could go long right here or short, and it's going to be the same way. It's not going to be complex at all. So it's a really, really, really nice feature of futures, is that it's just super, super simple to go short. And then another amazing benefit of futures is that 60% of your profits are taxed as long-term capital gains, and 40% are taxed as ordinary income or short-term capital gains. So instead of 100% being taxed at, let's say, 30 or 40%, you would divide that up between, let's say you made $100,000, 60% of that, which is $60,000, would be taxed at, let's say the long-term tax rate is 20%. So you're just paying a lot less in taxes, which is amazing. This is not a rule for stocks or options. This is only a rule for futures. I mean, can you believe how crazy that is? The fact that you could be trading for 30 seconds to a minute, buying and selling in under a minute, and all of that profit, or sorry, not all of it, 60% of that could be taxed at a long-term rate that if you were trading stocks, you would have to wait over a year to be able to get the 20% long-term capital gains instead of 30 or 40% for short-term. That is just absurd. The next benefit that's not on here is the fact that futures are traded 23 hours a day, 6 days a week. So futures open at 6 o'clock Eastern time, 6 o'clock p.m. Eastern time on Sunday, and they're open from Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. And every single day they close at 5 p.m. and reopen at 6. And so, of course, on Friday, they close at 5, and then they're closed until 6 o'clock p.m. Eastern on Sunday. So it's kind of cool because you can take a trade in the overnight session, like what would be right here, and there is some decent moves. I mean, there's not like crazy volatility like how it might be at 9:30 on, like how it might be at 9:30 in the main session, but again, if you can't trade every single day and can't be at the screens for an hour, 2 hours plus, then you can try to swing trade with some micros, and that could be a decent strategy for you. So that's just some of the pros of futures, and now let's look back into the types of futures. So, yeah, we already kind of went over this, but I mean, just look at how many different futures there are. I mean, there's just an endless supply. I mean, it is crazy how many. Again, we're only focusing on the S&P, NASDAQ, crude oil, gold, and occasionally the Dow Jones, but I don't even really trade the Dow Jones ever, honestly. But sometimes it'll have good moves. But again, you don't need to trade a million names. All you need to do is just focus on a few, which the ones that I just mentioned are the most actively traded, so they're always going to have really good price action. Because yeah, you guys, you just don't want to overcomplicate trading, and it gets so much easier once you just focus on just a few names. So let's just keep scrolling down the list. Options on futures, do not need to go over that. Yeah, so that's basically it for what they have on here. And I literally searched up information about futures trading, and look at how much stuff came up. I mean, you could literally just read all of that. Like, I mean, there's so much information. So one of the things that I do want to mention to you guys is, while yes, seek out as much information from other people as you can, just to learn, just to get a decent idea of what a topic or strategy or anything like that is. While yes, you should do that, also make sure that you're being proactive in learning yourself. And this includes when we do start getting into price action, risk management, strategies, etc. Don't only listen to me, and don't only pay attention to me. You should, like, I'll teach you a decent amount of this stuff, but you also have to be very self-motivated to go out and search for more information about futures and back testing and getting in screen time, because that's the only way that you're actually going to become successful. I can teach you a little bit of stuff, but the way that you're actually going to become profitable and make money is by doing all this stuff yourself, and going the extra mile to look for more information and to put in more screen time on the charts. No trader has ever become profitable just by learning from someone else. They've had to put the work in themselves of learning about what a double bottom is, but then looking at double bottoms online, looking at double bottoms on order flow, looking at double bottoms on the chart over and over and over again until it starts clicking. So that's just one thing that I want to hammer in to you guys, is the fact that you just have to be very proactive and seek out whatever stuff that you're trying to do or learn, and just do it yourself. So now for the last part of this video, I'm just going to go and move my thing really quick. So danielstrading.com/trading resources/futures calculator, or you can literally just search up futures trading calculator. But so if you just go to that website, you can literally just go to ES. There we go. This is just a really simple way of figuring out your profit or loss, because it can get a little bit tricky on what contract sizes are for each contract, what futures contract you'll be trading. So for ES, I'll actually go over that really quick. So for ES, it's $50 a point. So that means for every point up that ES goes, it is $50 of profit or loss. And if we go to NASDAQ, it is $20 a point. If we go to, let's see if they have gold. Yep, gold, it is $100 a point. And if we go to oil, where would oil be? Boom. Oil is $1,000 a point. So it can be a little bit tricky if you're not dealing with perfectly round numbers. So let's say I bought oil at 85.46 and I sold at 86.52, or let's do 78. Number of contracts, 1. Calculate. Boom, I would have made $1,320. So it's just a lot easier to do this until you get the hang of just calculating profit and loss. You don't even really need to calculate the profit and loss. You can just do it by points on the chart. So I'm going to be risking 20 points on NQ or risking 10 points on ES. That's really how you should be doing it. But it's always nice just to get a clear-cut example of exactly what your profit and loss would be for that trade. And also something that I wanted to get into as well is, again, this isn't that big of a deal. So in futures, there are things called rollover. So of course, let's go to here on Thinkorswim, the trade tab. And let's just wait till it brings it up. So see here, ESU23, ESZ23. So these are all different contract expirations of the S&P 500 futures. So you can see this one that we're currently on that has the most amount of volume is going to expire in about 7 days. So then we roll over to the December contract that expires in 98 days. So the one thing you have to be careful on is rollover week, which would be next week, which would be the 11th through the 15th. So you have to be very careful because you don't want to be trading either A, the wrong contract with not a lot of volume, or B, get stuck in that contract, which I think actually most brokers will auto close your account, or not your account, your position, because it would just be a disaster if you had to go take delivery of 1,000 ounces of gold or something just because you accidentally forgot to close a futures position. But again, that's really not much of something to worry about because brokers know that most, like literally 99 out of 100 retail traders will not even have the funds to take delivery of any futures contract, so they just auto close your position. So you really don't have to worry about it. And and rollover doesn't even happen that often. I mean, it's, I think, about every 3 months. So once you're on the next contract, which you can see here, some people kind of are. Once you're on the next contract, I mean, it really doesn't matter exactly which one. The only way that rollover really matters is if you are swing trading through rollover week, which again is not what we're focused on, so we do not need to even worry about it. However, all you need to do is just know the symbols /ES for S&P, /NQ for NASDAQ, /CL for crude oil, and /GC for gold. So that's how you type them in. And on TradeStation, it's literally the same thing. However, on TradeStation, you do have to type in the full symbol, which would be at GCU20, or at, let's say, GCV23. And again, guys, it is just not anything to worry about, but I just figured why not tell you guys about it right now. Just because something to know, and something that I didn't even really know. I did not know where to check for rollover dates, and it just comes in handy to know when rollover week is, because if you are trading on TradeStation, which in my opinion is one of the best futures brokers, then you have to switch over to the next contract, and you do have to do that manually. So you just kind of have to know around when it is. But if you just follow the stock market on Twitter, I mean, it's really easy to see when that happens. Or you can just download Thinkorswim and come to the trade tab, all products, search up the future, and you can easily see which one you should be trading because it'll say active to the side of it. So that is for rollover. Just thought you guys should know about that. And think that is basically it. You can basically see the delivery month symbol key right here. January's F, February's G, March H, April J, May K, June M, July N, August Q, September U, October V, November X, December Z. So again, I mean, you don't need to memorize this stuff, but why not just tell you guys? So anyways, I think that is basically all you need to learn just for some information about futures. And yeah, I hope you guys just enjoyed watching this video. Hope you guys got a decent amount of value. And again, if you guys could just subscribe, like, and comment for the algorithm, that would be awesome. Would really love to be able to get these videos shown out to more people. But again, guys, thank you for watching. Stay tuned for part 4, and see you guys in the next one. Peace.